A company produces and sells one product only. The thing, the standard cost for one unit being as follows. We have material A, we have material B, we have direct wages, fixed production overhead, we have the total standard cost. The fixed overhead included in the standard cost is based on an expected monthly output of 900 units. Fixed production overhead is absorbed on the basis of direct labor hours. During April, the actual results were as follows. So you can see during the month of April, they have given us actual results. It is this actual result that we shall be able to benchmark with, because variances is all about benchmarking. We shall be able to benchmark with the standard cost. Anytime they want you to compute variances, they must give you the standard cost card and they must give you these actual results. So the actual results they have given as material A, material B, direct wages, fixed production overhead. So they want me to calculate the price and usage variance, which I should be able to do very fast. So how do we get the material price variance, ladies and gentlemen? To get the material price variance that I shall abbreviate like that, to get the material price variance that I shall abbreviate like this, material price variance, this is the variance between two prices. This is the difference between two prices. The price that they call standard minus actual price. And then at the end of the day, we have the actual quantity of materials that were purchased. So anytime they tell us, ladies and gentlemen, to get material price variance, variance means difference. Difference between what here two prices. We have the standard price per kilogram. Please write this in full. This is standard price per kilogram. Write this in full. AP stands for actual price per kilogram. AP stands for actual price per kilogram. And then we have a Q standing for what here? Actual quantity of materials purchased. So then we have got two types of materials here. We begin right away by giving our examiner the material price variance for A. Material price variance for A. So I'm looking for SP and I would want somebody to give me the value of SP. I'll do this question in 2 minutes. So is there anybody who is able to see the standard price of material A? Standard price of material A. Is there anybody who is able to see the standard price of material A? Somebody talk to me this night. So first of all, the key catchword is standard. The catchword is standard. And when I look at material A, I can see 10 kilograms at $20 per kilogram. Don't work with this 200. 200 is for 10 kilograms. I want SP, which is standard price per kg. So the standard price per kg is 20. How about the actual price? Because the second item that they would want me to work with, is called actual price per kilogram. When you look at the actual information given, this is it. Look at the actual results. You can see material A, it is 7,800 kilograms used, which cost them a total of 159,900. So then each kilogram cost them 159,900 divided by 7,800. Because I want cost per kilogram and the actual price per kilogram. So ladies and gentlemen, then what I'll need to do here is to come and talk of the standard price of 20 minus the actual price, which I should take something divided by something. Mary has already given me the answer. The actual price, according to Mary, is 20.5. Is there any other person who is able to get that 20.5? Because I should take 159. I should come here and take the 159,900 divided by 7,800. So 159,900 divided by 7,800. And then outside here, I have the actual quantity, the actual number of kilograms here that we purchased at the end of the day. Outside, we have the actual quantity, the actual number of kilograms here purchased at the end of the day. How many kgs were we able to purchase? 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 Actual kgs. Actual kgs purchased according to Faith Regon. She's telling me it is 7,800 like that. And you've seen so many students telling me that Mwalimu, this is 20.5. So you can see we planned to procure these raw materials at 20, but we ended up paying more for them. We ended up actually paying 20.5. So the resulting variance, is it going to be an adverse variance or a favorable variance? Is it going to be adverse or favorable? Is it going to be adverse or favorable? Adverse, yes. Adverse. But the very best, I even don't prefer seeing my students getting this answer separately. No, you should never do that. The very best, come and open brackets there. You say 20 minus this divided by this, you close, times 7,800. You say 20 minus this divided by this, you close, times 7,800, and then you say equals. If the final answer is going to be negative, then negative performance means adverse. Negative performance means adverse. So could you kindly give me the final answer here? What do we have here, somebody? 3,900. And because it's negative, we don't write negative here. To show it's negative, you simply come and put A. A for what here, somebody? For adverse. A for adverse. Thank you very much. Doreen Mogo is a new student. Right? So remember, we have got two types of raw materials. So could you kindly go ahead and do in the plugins for material B? And then we compare notes together. Let's do the plugins for material B. Let's do the plugins for material B. And then we compare notes. And then we compare notes. Then we compare notes. And then we compare notes. Let's do the plugins for material B. And then we compare notes. Material B, I can see 5 liters at $6 per liter. At $6 per liter. So I'm following this formula. So is there anybody who is able to pick the standard price? In this case here, this will be standard price per liter. The smallest unit of measure, liter. So the standard price per liter is 6. Minus the actual price per liter. Please throw eyes to the actual information. I hope you're able to see my cursor. My cursor is on actual results. So for material B, we have 4,300 liters used, costing 23,650. So we have 23,650 divided by 4,300. 23,650, 23,650, 23,650 divided by 4,300 liters used. And then outside here, it's all about the actual quantity. So actual quantity, I can only pick the actual quantity of materials. Here, I've always seen people picking the actual quantity produced. It is AQ stands for actual quantity of materials purchased. So the actual quantity here of material B is 4,300. Is 4,300. So then could you kindly give me the final answer here? Could you kindly give me the final answer here? Mniambie ni ngapi somebody material B? Mniambie ni ngapi material B? According to Damaris Mutembei, 2150, and because it's positive, so we talk of 2150 favorable. So that is it. Good, good. From ladies and gentlemen, I can see the next variance they want me to compute still in part 1 is the material usage variance, which is the same as what here, somebody, like the material efficiency. Were we able to save our raw materials, or we utilized more? So material usage variance, first of all, I would want to see whether there is any student who will be able to give us the formula of material usage variance. Let me see whether there is any student who will be able to give me the formula of material usage variance. Material usage variance will be equal to material usage variance will be equal to material usage variance will be equal to material usage variance will be equal to, let me see somebody, without looking at your notes, I would want some of you here to give me the answer directly. How do we get the material usage variance? How do we get the material usage variance? Karo mejaribu, lakini that is for labor. That's for labor. I can see Faith Regon. I can see another student up there was able to remember that usage variance. We'll have to compare really, what is the standard quantity that was set for me to utilize? What is the standard quantity that was set for me to utilize? Minus what was the actual quantity that was utilized? And then most students have been able to recall very fast that really this is a variance, but now in terms of quantity, which needs to be monetized, which needs monetization. And to monetize, now we need to come and put out there the standard price. Monetization, when you're putting money out, it has to be standard price. It must be standard price. And then there is a student who has made me very happy tonight. Actually, that student here deserves some M-Pesa. She's called Hilda. Hilda has been able to remember the full meaning of this. Amekuja akasema, it is standard quantity for actual production. Standard quantity for actual, I can't be happier. It is standard quantity for actual production. Please, for the new students, write in full that this is standard quantity of raw materials. Standard quantity of raw materials. How about AQ? AQ is actual quantity of raw materials. AQ is actual quantity of raw materials because this is a material variance, actual quantity of raw materials. And then we have SP. SP, never forget, this is not selling price. This is raw materials can never have any relationship with selling price. Selling price can only come when we are computing sales variances. So, ladies and gentlemen, this SP stands for standard price per kilogram. That's how I like looking at it. It is standard price per who? Per kilogram. It is standard price per kilogram. So then, ladies and gentlemen, if that is the case, remember we have got two types of raw materials. So what we shall do as such is to come and compute the material usage variance for A, of which I would want to give you just 1 minute. Don't make reference to your answers, right? Even if you have done this kind of a question before, which I doubt, please don't look at your answers. This is a very special class, but I would want us to use these concepts here to cement these issues, to cement whatever theories you're learning here permanently in our mind, not for permanently, but at least for some good number of weeks, and then you can forget. Because I'm so sure there will be very few of you who would want to become teachers like myself. It's unfortunate that this is a hated profession, very hated profession. Very unfortunate, right? So I would want to see whether there is a single student, especially will be able to get this. If you get this correctly, standard quantity of A for actual production, you are a genius. You are a genius. You are a genius for sure. Standard quantity for actual production. Project the question, sorry. And then Ruth, if possible, there is a way you'll be able to take a screenshot of that question. There must be a way you'll be able to take a screenshot of that question. So let's compare notes and work on this together. So when I hear the word standard, what will draw my attention is this standard cost curve for just 1 unit. And then when I look at material A, I can see a quantity 10 kilograms. So this quantity, which is under the standard cost gate, is what we call the standard quantity of A. But you see, it is 10 kilograms for 1 unit. Listen and listen to me very well. Listen and listen to me very well. So when we talk of a standard quantity for A, then this will be 10. But now times what? Because remember, it is standard quantity for actual number of units that were produced. Anytime we talk of capital SQ, there must be actual number of units here produced. So it will be 10 times what? It will be 10 times what? It will be 10 times what? We must be knowing the number of units here that were produced at the end of the day. So the number of units here that were produced at the end of the day, if you look at this thing very keenly, the production was 800. The production was 800. So in this case, it will be 10 times 800. And ladies and gentlemen, please here, I've always seen students saying actual quantity is 800. No, this is actual quantity of material A that was used. The actual quantity of material A that was used, is there anybody who is able to give me this quantity of material A that were used? Is there anybody who is able to give me this actual quantity of A that was used? Somebody. 7,800. Because once you mention the word actual quantity, I'll have to go to the actual information. And for sure, this is the actual information for sure. This is the actual information. And I'm able to see the actual quantity of A as 7,800 kilograms, like that. And ladies and gentlemen, out here, it is not lost on me that this SP stands for standard price of A per kilogram. It stands for standard price of A per kilogram. So then what I need to do is to come very fast, ladies and gentlemen, here. And look up here for the standard price of material A. It is 10 kilograms at 20 per kilogram. Remember, SP is standard price per kilogram. So 20 here. So if that is the case, times 20, I'm so sure there must be, I saw some guys giving me answers. Could you kindly give me the material usage variance for A? Kindly give me the material usage variance of A, which in this case here, Juma tells me is 4,000. 4,000 advanced or favorable. You know, Jabir, you can't just tell me 4,000. You must really be able to, right, profile your variance. So in this case here, favorable. And if that is the case, then could we kindly go out and find the material usage variance for B? For B, please throw your eyes to the standard quantity of B. This is the standard. This is the standard card. So material B, the standard quantity is 5. But please remember my capital SQ. It is supposed to be standard quantity for actual production. Actual production, which was what here? Somebody 800. Actual production, which was 800. Minus the actual quantity of boy. The actual quantity of boy that was used. Please throw your eyes to the actual quantity, actual information of B, and be able to pick for me the actual quantity of B that was used. Is there anybody who is able to see the actual quantity of B that was used? Is there anybody who is able to see the actual quantity of boy that was used? Actual quantity of boy that was used here is 4,000. Actual results of boy used is 4,300. 4,300. So it's 4,300 times the standard price of boy, which you guys gave me a figure of $6 per liter, which Hilda has been able to tell me it's 1,800 negative, but I can't say negative. So instead of saying negative, I'll say it's 1,800 what here? Adverse. It's 1,800 adverse. There is no any other topic that I'm so serious with than this topic here, because I know variances. For those of you who do betting, variances is a sure bet. We can even bet with you. Variances is a sure bet. And please never be very comfortable with it such that you reach a level where you say you are no longer revising it. No. Variances, you need to keep on revising variances to the end, even on the day of an exam, that particular morning, you need to be looking at the formulas of variances. Go with it, run with this ball to the end. This is a savior for many students. So now we are through with the material variances, that is material variance price, material variance usage. Now from there, look at number 2 of this question. Number 2 of this question, they want us to do something very easy. Number 2 of this question, they want us to do something very easy. This easy thing that they want us to do is to calculate the labor rate and the labor efficiency variance. Labor rate and the labor efficiency variance. So we have here the labor rate variance. So the labor rate variance, what do we have? Labor rate variance, I remember at the beginning of last year, as colleges, we had set the rates of paying our workers. We said that for senior resources, senior lecturers, every hour they teach, 1,800. That's what we had said at the beginning of the year for senior resources, because we'd want to have your senior resources, senior lecturers being comfortable. Otherwise, you shall lose them to competitors, right? And then March, boom, COVID. So with COVID, would we really have sustained the rate of 1,800 and yet the number of students in the classes here fell down from whatever to almost 0? No. So when you are talking of labor variances, ladies and gentlemen, always get to know that we have got 2 types of rates here. We have the standard rate per hour, and then of course we have the actual rate per hour that will be obtained. Right? And then, ladies and gentlemen, outside here we have what we call the actual what here? We have what we call the actual hours. We have what we call the actual hours outside there. So please write in full that SR stands for standard rate per hour. SR stands for standard rate per hour. SR stands for standard rate per hour. AR stands for actual rate per hour. Actual rate per hour. And then AH stands for actual hours. Actual hours. There is a student who has given me a very good acronym. A very good student who has given me a very good acronym. Ameniambia mwalimu kama atuoli atukisikia labor rate variance, you think about SARA. I don't know whether this will be very good. SRARA. Ah, seems beautiful. SRARA. Alafu akuja akaniambia mwalimu, hapo unaweka namna hiyo, for labor rate variance inaingiana mzuri. Mwingine akaniambia kwamba these actual hours, they have to be what here? They have to be actual hours paid. Thank you very, very much, B. They have to be the actual hours which were paid. And I hope for the new students, they've been able to write here that this is standard rate per what here? Per hour. And this is actual rate per who? Per hour. Actual rate per hour. And then AH is actual hours done what? Actual hours paid. AH stands for actual hours paid. AH stands for actual hours paid. Is that okay? So then if that is okay, could we kindly look at our case in context, and then we calculate the labor rate what here? The labor rate variance. Let's calculate the labor rate variance. Let's calculate the labor rate variance. Let's calculate the labor rate variance from the question given, and I'm giving you 2 minutes. So Bernice, I don't know whether you guys, your power was able to come back or how you are surviving miraculously. Is a story for another day. Sirara. Ah, my students are bright. Sirara. Great. Elaborate variance. Sirara. Great. So let's do this together. The very best thing that I've understood from you is that SR stands for standard. So remember, labor cost is quite similar to wages. Remember, these are labor costs. And from the wages here, you are able to see the standard rate per hour, which is 6. So the standard rate per hour is 6. And then throw your eyes to the actual rate. So if you throw your eyes very well to the actual rate, I can see what Mary is giving me. Actual rate, ladies and gentlemen, please, this is the actual. This is the actual. By the way, when I do like this, are you able to see my cursor? Are you able to see my cursor, where my cursor is dancing? Are you able to see my cursor? Are you able to see my cursor? Are you able to see my cursor? Let me see the answers. Then Zoom is a powerful teaching tool. Actual results. So then my direct wages, you'll be able to see 4,200 hours worked for 24,150. 24,150 is the total cost. I would want to make this an hourly rate. So it will be 24,150. It will be 24,150. 24,150 divided by 4,200. Divided by 4,200 times the actual hours paid. Actual hours in this case here, actual hours, here they're not differentiating between actual hours paid and actual hours worked. So the actual hours paid directly will be the ones that we have here, which are 4,000, what here? 4,200, which are 4,200. So could you kindly give us the final answer? Could you kindly give us the final answer? So how do you do it? You take your calculator, say on, and then you open brackets. You say 6 minus this divided by this, you close, times 4,200. You tell me equals. So somebody is giving me 1050. 1050 favorable. 1050 favorable. Are we getting 1050, all of us? Are we getting 1050 favorable? Favorable, I remember very well when I started doing this particular subject in CPA, those old days, it was called cost accounting, that subject, right? So I remember I joined a class of variance analysis like most of you have done in block release. So, and I sat next to some lady. So this lady, every time she could get figures 1050, she used to shout, favorable, adverse. Actually, I almost gave up in the first class, given the aggressiveness of that lady. Yeah, favorable, adverse every time. So I thought perhaps this lady was what here, a genius, right? So, but when I came to realize that favorable, really, for you to tell whether a figure is favorable, the only thing you need to know is whether the thing is positive or negative. If it's positive, it's favorable. Nikajua kumbe kitu doable. So hata wewe uko hapa ni mwanafunzi mgeni kabisa, don't be in this case you're scared by anybody. All of us are at the same level. So 1050 favorable. Thank you very much. Now you can go very comfortably to the next variance, which has been asked. Remember, labor variances, there are 2 types. So we have the labor efficiency variance. Is there anybody who is able to remember the formula of efficiency variance? For you to remember that, remember in Kenya here, the 43rd tribe. The 43rd tribe is a tribe that has got a Mr. Shah, yes. The tribe in this case here with the Shahs, the Waindis. These Waindis are very efficient in whatever that they do. In business, you can never get anybody who will be able to match their prowess. Their business acumen is at a very different level. There is no way we will ever match. So anytime they talk of efficiency variance, you always think of what here, Mr. Shah. Mr. Shah. And then outside, we have, in this case, your standard rate per hour. So anytime they talk about efficiency, always you should be able to remember that efficiency, it is the Shahs who are very efficient. Ladies and gentlemen, I would want us to be very honest with ourselves here today. Is there anybody who works for Indians? Is there anybody who happens to be an accountant for a farm, of a farm that is owned by an Indian? Let's be very honest, yes. How would you rate them in terms of efficiency? How would you rate them in terms of efficiency of operations? Don't rate them in terms of how they pay salaries. Let's be very honest. Strict to time. In terms of efficiency, trust you me, those guys in this case here do not know losses. They don't know losses. They are very efficient. And trust you me, even as an accountant, when in this case here, ladies and gentlemen, yes, when you work with them, you become so good. They really train you as an accountant. Like now you can see what Joyce is saying. I can be an accountant anywhere. Experience galore. Experience up there. Those guys train you the hard way. They train you the hard way. Thank you very much. So, Mr. Shah, they're very efficient. So this Shah, this SH stands for standard hours for actual production. Standard hours for actual production. Standard hours for actual production. Very important for us to learn that. So, and that, if that is the case, then our labor efficiency variance here will be equal to who? Is there anybody who is able to see the standard hours there really? Anybody who is able to see the standard hours there? So the standard hours that I'm able to see here from the word standard, I'm able to see direct wages, 5 hours, 5 hours. So the standard hours are 5. The standard hours here are 5, but remember, for capital SH to make sense, you must always involve the actual number of units that were produced. And you're the ones who told me that, hey, Mwalimu, in the period, we actually produced 800 units. In the period, we actually produced 800 units. In the period, you are the ones who told me here that in the month of April, the actual production was 800, like that. Thank you very much. Minus the actual hours, actual from the results, actual results, the actual hours, I can see they were 4,200. The actual hours were 4,200. So minus 4,200 multiplied by the standard rate. This is standard rate per hour. And if my memory serves me well, you guys were able to give me the standard rate per hour. Is there anybody who is able to remember the standard rate per hour? Anybody who is able to remember the standard rate per hour in this question? Yes, they're telling me it is 6. Yes, because I'll come here and I'll be able to read the standard rate per hour as 6. The standard rate per hour is 6. The standard rate per hour is 6, like that. So then at the end of the day, what shall we get? 1,200 adverse. So this is 1,200 adverse. This is 1,200 adverse. 1,200 adverse. 1,200 adverse. Thank you very much. 1,200 adverse. Thank you very much. Now we are through with labor variances. We are through with the labor variances. Now we can very easily, ladies and gentlemen, go to the next thing. The next thing, what do we have here? The next thing, what do we have here? The next thing that they want me to do in this question that is quite easy. They want me to calculate fixed production overhead expenditure and the volume variance. Calculate fixed production overhead expenditure and the volume variance. Can you do that for me? Is there anybody who can calculate the fixed overhead expenditure variance for me? Fixed overhead expenditure, fixed overhead expenditure variance, fixed overhead expenditure variance. Is there anybody who can remember the formula? Yeah, fixed overhead expenditure variance. Fixed overhead expenditure variance, ile hesabu ya marafiki zangu wawili, ma politician. Nyinyi vijana wadogo hamwezi kuwakumbuka. Tulikuwa tunawaita before minus, in this case here, this guy. Before wakoli, yes. So it's budgeted fixed overheads minus actual fixed overheads. It's budgeted fixed overhead minus actual fixed overhead. So anytime they talk of fixed overhead expenditure, this is what I will be remembering. But now, how do I calculate budgeted fixed overheads? I would want to see whether there is any student who will be able to calculate the budgeted fixed overheads for me. So the question here, is there any single student who will be able to calculate how much were we budgeting to incur as our fixed overhead, total budgeted fixed overhead, the total budgeted fixed overhead? I'm waiting to hear from you great students. How much, you great accountants, how much were we budgeting to incur as our total fixed overheads? Abracadabra, this fixed production overhead you can see from the standard card is 50. And because we know that we expected a monthly output of 900, no expected monthly output. Expected is the same as budgeted. So it means, ladies and gentlemen, that for me to be able to get the total BFO, the budgeted fixed overheads per month, what I'll do is to take 50 per unit. Remember, 50 is for each unit. 50 is for each unit times the budgeted output in a month. Budgeted output is the same as expected output. So it will be 50 times 900 minus the AFO. AFO stands for who? AFO, ladies and gentlemen, AFO stands for who? Our AFO, at the end of the day, we are able to see our AFO. Our AFO, the actual fixed overheads from the actual results here, AFO only 47,000. AFO only 47,000. So when you pick your 47,000 here, ladies and gentlemen, you are sorted out. So 50 times 900 minus 47,000, that gives me, according to Faith Regon, that gives me 2,000. 2,000 who? 2,000 adverse. That gives me 2,000 adverse. That gives me 2,000 adverse. That is great. And I'm so sure that all of us would have really gotten this correctly in an exam. What I do not know is whether there is anybody who will be able to get the next component which they want me to calculate. The fixed overhead volume variance. Is there anybody who will be able to get the fixed overhead volume variance, first of all, by putting down the formula? Fixed overhead volume variance by putting down the formula. Caro, hapana, umejaribu lakini hapana. Caroline. Umejaribu lakini hapana. Fixed overhead volume variance. Very good. Mary has it. You know, this is the difference between two volumes. Fixed overhead volume variance, ladies and gentlemen, fixed overhead volume variance is the difference between two volumes. It is budgeted volume minus actual volume multiplied by standard fixed overheads per unit, because these inside here are units. Thank you very much, Joyce. Thank you very much. So for the students who are joining us here for their very first time, I would want them to write this in full, that BV is budgeted volume. BV is budgeted volume. AV is actual volume. AV is actual volume. So, ladies and gentlemen, could you kindly come here and pick the budgeted volume for me? How many units were we budgeting to produce in that particular month of April? Budgeted volume. How many units were we budgeting? 900. Thank you very much. But we actually sold how many? What is the actual volume sold? Actual volume sold. It's like the same as the actual production. So 800 into what is the standard fixed overhead per unit? What is the standard fixed overhead per unit? Standard fixed overhead per unit. Per unit, it is 50. Could you kindly give me an answer here? Could you kindly give me an answer there? 50,000 adverse. 55,000, sorry. It's 5,000 adverse. Thank you very much. It's 5,000 adverse. 5,000 adverse. It's 5,000 adverse. It's 5,000 adverse. Is it supposed to be adverse or favorable? Is it supposed to be adverse or favorable? Is it supposed to be adverse or favorable? Somebody talk to me. But Mwalimu, I got a positive figure. And I feel that I should have this being a favorable variance. Ladies and gentlemen, whenever it comes to fixed overhead volume, you must always remember the case of what we call exceptional variances. Always. Exceptional variance, as Faith is telling us there are three types. The first one is fixed overhead volume variance. It's an exceptional variance. Number two, which other variance you guys do remember? Which other variance? Sales variances. All sales variances are exceptional. They are exceptional. And then lastly, we have what we call fixed overhead. Capacity. So we have what we call fixed overhead capacity variance. Fixed overhead capacity variance is exceptional. Now the question is, exceptionality means that the variance is very hard to compute? No. Exceptionality means that if I get any of these three variances being positive, like this positive, I'll be interpreting them in the opposite way. Any of this, if I find a positive, then adverse. They become adverse. Like this one, when you calculated, for sure, it was positive. But positive variances impact our profitability positively, favorably. Positive variances should always be favorable, except for the three. Great. And I hope that everybody now is able to understand why we are calling these an adverse. I hope everybody is able to understand why we are calling that adverse. Now, from there, ladies and gentlemen, we move to something very important. They wanted us to calculate fixed production overhead expenditure and fixed overhead variances, and then subdivide the volume variance. The volume variance is to be subdivided. So I want you guys to do me a favor. You can see material A, B, wages. They are putting these narrations inside. 10 kilograms at 20. 5 liters at 6. 5 hours at 6 per hour. So I want you to do me a favor. Fixed production overhead is blank. In the narration section, fixed production overhead is blank. I know the number of hours are 5. So I want somebody, because I know you must have copied this question down, there in the narrations of fixed production overhead, I want somebody to put there 5 hours. 5 hours at dash equals 50. And then you tell me what the dash stands for. So somebody, the narrations here for fixed overheads, put in brackets. In brackets, I know overheads are going to be absorbed using hours. And I know that for sure, this thing is going to take 5 hours. So I would want somebody to put there for fixed production overhead, 5 hours at dash equals 50. 5 hours at dash equals 50, and then you tell me what the dash stands for. Is there anybody who will be able to get for me that dash? Is there anybody who will be able to get for me that dash? Is there anybody who will be able to get for me that dash? Is there anybody who will be able to give me that dash? Nobody's talking to me. No, I can see 2 people. I can see 2 people. Those are too few for a class of 40 students. Too few for me. Too few for me. 10 per hour, 10 per hour, 10 per hour. Thank you very much. Because like now, if you look at this keenly, like now, if for example, this 6 wasn't there, ingekuwa ni 5 hours at dash equals 30. So ingekuwa ni 5 hours times x, because dash is x, equals 30. Then x would have been 30 divided by 5. I would have gotten this 6. The same case here, we have 5 hours at x per hour, 5 hours at dash. So if we take dash to be x, then it will be 5x equals 50. Then x will be 50 divided by what here? Somebody 5, which is $10 per hour. Thank you very much. Thank you very much for that. You got that without much explanations for me, which is very good, meaning that Mwalimu is able to earn without putting in a lot of effort, which is very commendable, which is very good. Thank you very much. Ladies and gentlemen, I would want you to listen and listen to me very well. Listen and listen to me very well. Let's look here. Let's look here. So before we look there, can somebody give me the components of a fixed overhead volume? Now this fixed overhead volume has got 2 children. The fixed overhead volume has got 2 children. The fixed overhead volume has got 2 children. The fixed overhead volume iko na watoto wawili. Tena watoto mapacha. Kama nyinyi wengi mliniambia mko na mapacha, sijui nyinyi mko na bahati gani maishani jamani. Kupata mapacha, najua wanasumbua kidogo hapa na pale, lakini kupata mapacha ni blessing kubwa sana. Ni blessing kubwa sana. Unawafuga mara moja, unachunga mara moja, alafu akiamka wote unabaki. Hata ni kama hujai kuwa mzazi tena, mzuri sana. So, hii iko na mapacha wawili. Fixed what ya somebody, fixed volume iko na mapacha wawili. Pacha moja inaitwa fixed overhead, fixed overhead, fixed overhead, fixed overhead, efficiency kwanza karo. Pacha moja ni fixed overhead efficiency. Kwa vile Karo anatuambia, hiyo ingine itakuwa ni fixed overhead capacity variance. Fixed overhead capacity variance. So tuanze na fixed overhead efficiency variance. Anytime they mention the word efficiency, I'm not lost for words inside my brackets. Anytime they mention the word efficiency, I always remember my friend from the Indian community. There is no way it's Mr. Shah, Mr. Shah, Mr. Shah, Mr. Shah, like that. I'll always remember my friend from my community. It is Mr. Shah. And then, ladies and gentlemen, outside here, because it's fixed overhead, then outside here we shall put SFO. But now the question, yes, the question will be, will this be SFO per unit? And yet these are not units. So it should be SFO per who? Joyce anasema ni SFO per hour. SFO per hour. SFO per hour. Now listen, there is a mistake that each one of us is doing. There is a mistake that each one of us is doing. Nobody has been able to remember what capital SH stands for in full. Nobody. I can bet with you on that. Nobody has been able to remember what capital SH stands for in full. In full. In full. Nobody has been able. Very good. Joyce is the one who has really captured this in the context that I really needed. Amejua ni standard hours. Forget even about the other explanations. The standard hours for who? Actual production. The standard hours for actual production. So standard hours, brasema ni ngapi standard hours? Tuanzie hapo kwanza. Standard hours. Standard hours, the question has got standard hours. Standard hours wamesema ni ngapi? Standard hours. Standard hours wamesema shigana. Standard hours wamesema ni 5. Damaris, thank you very much. But now remember that because it is capital SH, just like capital SQ, the two will always get the actual number of units produced being involved. So 5 times who? 800. 5 times 800 minus the actual hours. Actual hours, is there anybody who is able to see the actual hours that was spent in whatever production? Actual hours, please go to the actual information in this table. Go to the actual information in this table. 4,200, 4,200, 4,200, 4,200. Ukuje hapo seme times standard fixed overheads per hour. 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 Mwangalie Karo anadanganya. Mwangalie Karo anadanganya. Kuna mahali niliwaambia mfanye kitendo fulani. Kuna mahali niliwaambia mfanye kitendo fulani ndiposa muweze kupata standard fixed overheads per hour. Kwa hiyo tulikuwa nimewambia. Magdalena ameiona. Ndio muweze kupata 10 per hour. Kuna kitu. Joyce, remember we are past that. Already kuna kitu kuambiwa ndio kwa bracket mahali. Nikasema dash kwa fixed overheads dash. Ruth amesema ni 2. Hebu kumbukeni pale. Oye, parawa oye. Kumbukeni oye hapa. Tukakuja tukasema hapa kwa standard. Tukasema hapa weka 5 hours. Then how many, or rather how much? If it's 5 hours, how much should we charge per hour given that the total is 50? Mukasema ni 5x equals 50. X is rate per hour. So it will be 50 divided by 5, which gave us 10. I don't know whether we are together up to there that X, this fixed overheads, is supposed to be 10. Remember, the 50 that you have is for a whole unit. A whole unit that took us how long to produce? 5 hours. Then each hour must have cost us 50 divided by 5, which is 10. That's why you saw somebody like Joy saying 50 over 5. Are we together up to there, or should I close this class? You know, at times it can't be just like talking and people are not following. I would want us really to align. I would want us to align. So are we together there with that 10? Are we together there with that 10? Tuko pamoja kama Jubilee. Thank you very much. 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 So 10. So then could you kindly give me an answer there? Give me an answer there. Give me an answer there. Give me an answer there. So at the end of the day, what figures do we have? At the end of the day, what figures do we have? So Grace says 2,000 favorable. Juma says no. Juma says no. It should be 2,000 adverse. Whose story do I buy? Whose story do I work with? Should I work with a Juma story? Very story. Whose story should I buy? Is this figure supposed to be adverse or favorable? Is it supposed to be adverse or favorable? Is it supposed to be adverse or favorable? Juma, you have got supporters here. Juma, you have got supporters here. I don't know the economic model that Juma is talking about, whether it's bottom up or trickle down, but the thing is that Juma, you have some supporters here. So they really called Joyce. They amesema vizuri. Amesema mwalimu, lakini mwalimu si negative. Na kama negative kusema ukweli, si tuile tu adverse. Nikamuuliza kwa nini, akaniambia utaita adverse kwa sababu efficiency is not among the exceptional. Efficiency is not among the exceptional variances. Ameniambia efficiency is a normal variance. Exceptional variances ni kama fixed overhead volume, fixed overhead capacity, and the sales variances. So efficiency is not among them. Efficiency is not among them. It's a normal variance, and if it's a normal variance and it happens to be negative, then it has to be adverse. Ladies and gentlemen, now we go to the last one. The last one is fixed overhead capacity. I like how some students have been able to connect efficiency with capacity. Wamejua kwamba capacity ni ndugu ya sha, na ndugu ya sha kama umeshafanya kazi, na hawa Wahindi sana sana ni wazuri sana, mimi nawapenda sana. Wahindi mimi nawapenda sana. Watakuambia fixed overhead capacity ni sawa na ba. Ndugu ya sha anaitangwa ba. Every other thing remains the same. Ndugu ya sha ni ba. Ndugu ya sha ni ba. So then, are you able to see, in this case here, the budgeted hours? Are you able to see 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 the budgeted hours? Budgeted hours, budgeted hours. Are you able to see the budgeted hours? Budgeted hours, budgeted hours, budgeted hours. Aki hawaoni. Mimi najua kuna ka standard mahali ka 5. So to get totality, total, I should take 5 times who? Ingekuwa ni capital SH, I would have said 5 times capital SH is standard hours for actual production. But now this is budgeted hours. This is budgeted hours. So I'll take standard hours for budget times 900. Thank you very much. Times 900. So this has to be budgeted production that is being employed. It has to be budgeted production that is being employed. So then I should take 5 times 900 minus actual hours. Are you able to see actual hours anywhere? Are you able to see actual hours anywhere? Actual hours anywhere? Are you able to see actual hours anywhere? Actual hours anywhere? I'm the only one who is able to see them faithfully. Truth says actual hours are 4,200. They are 4,200 times the standard fixed overheads per hour, ambazo ni ngapi? 10. Ambazo ni 10. So could you be kind enough by giving me an answer here? Go and open bracket somewhere. Useme 5 times 900 minus 4,200 close times 10. Uniambie mbesha shiga na. Mbesha shiga na. Mbesha shiga na. Mbesha shiga na. All of them are saying it is 3,000, but I saw somebody somewhere saying favorable. Is it 3,000 favorable or adverse? Everybody, Mary says adverse. Everybody is saying adverse. Why are they saying it's adverse and yet this thing is positive? Why are they saying it's adverse and yet this thing is positive? Because capacity. No, I don't want you to interpret like that. That will always give you issues. That will always give you issues. It's an exception of variance. It's an exception of variance. Ruth will not be able to have that privilege in terms of time, really, right? To think like that in an exam. An exam, just remember it's exceptional. And if it's exceptional, that is it. And if I want to see whether I am correct, ladies and gentlemen, I told you that fixed overhead volume variance has got 2 twins. Fixed overhead volume variance, thank you very much. Fixed overhead volume variance has got 2 twins. We have the fixed overhead efficiency, and then we have the fixed overhead capacity. So kumbusha mwalimu, fixed overhead efficiency variance was equal to what? Fixed overhead efficiency variance was equal to what? Somebody give me an answer. We did it up there. Fixed overhead efficiency variance, for sure we got an answer. We got this as 2,000. Was it adverse? Adverse, thank you very much. And then fixed overhead capacity, we have gotten 3,000 adverse. So then this at the end of the day will give me 5,000 adverse. And if you're so keen, if you remember what we got when we calculated fixed overhead volume variance, remember we had a special calculation of fixed overhead variance. Is there anybody who is able to remember the fixed overhead variance up there? Yeah. So therefore, it is agreeing. Yes, it is agreeing. It is agreeing. Thank you very much. Somebody is asking a good question here. Will I be penalized if I did not get that question very well? Will I be penalized if I do what? Will I be penalized if I forget to indicate A or F? Diana, the only person in this world who can really feel for you is your own mother. Your own mom. Moms are very special. Regardless of whatever you are undergoing, your mom will always be very close to you. What do you think of Kasneb? Is Kasneb any near your mother? Remember here, you and Kasneb are in opposing, right? They'll always use something, however small, to penalize you, Remember, the more you stay in the system, the more they earn. Quite sad, but I hope I've passed the message home and ensure that you understand this thing of profiling, adverse or favorable. That one you must. I've used a bad example, but do you agree that mothers are special? That even your own sister, even your own brother, even your own wherever father can run away from you, but your mother will never run away from you. But unless she's another one. Motherhood normally is a perfect definition of for worse, for better. We shall overcome. Great. Now, ladies and gentlemen, I would want us to go to something a bit different. I would want us to go to something a little bit different.